Hi, welcome to A to Z Trades with Manny. We'll be going over positions that I personally take from initially scouting the position, opening the position, any sort of management in between, and hopefully closing the position for a profit. And today we'll be going over a short strangle.
Okay, so this is actually my second recording of me doing this take. I actually did my explanation, did the first recording, put on the position, and then realized that the resolution wasn't as good, right? So this is my second take. I lost a little bit of money, but it's fine. So as of lately, I've been feeling that my portfolio hasn't been as diversified as I would like it to be, right? And because of that, I want to trade gold. Yeah, lately the market's been going really up and down, probably because of like semiconductors or whatever. But this is supposed to be an easy walkthrough, right? So I don't really want you to worry about any of that stuff right now. So this is the step-by-step process I would go through. So here I have the options table pulled up. And in terms of days of expiration, the first thing I like to look at is I like to pick something between the 30 and 45 day to expiration contract. And you would think, okay, Manny, the closest thing I could get here is the 43, and technically you are right. But the thing is, I do not really like trading weekly contracts, and as you can see, marked by this W, that this is a weekly contract. And that is because if you look at the volume, these contracts are not traded very often, and they also have pretty wide bid-ask spreads. So this means that the best price that you could sell it at is about $11.85, and then this is the best price you could buy it at is $12.55. Yeah, typically we like to trade stuff with closer bid-ask spreads because that means it's a lot more liquid, and thus we have a better chance of getting better fills. And because of that, I like to stick to the monthly cycle, right? So yeah, here at 22 days, I could technically take this, but the parameters that I have set up is I like to take profit between 50% of max profit, or I like to take it at 21 days to expiration, right? So even if I were to put this on, and I technically could, I would just end up rolling it over or closing the position the day after. I want to be in the position for a little bit just so I can collect more premium, so I can give Theta time to work. So I'm gonna go to the 57-day mark, even though that's a bit far away, right? We're gonna go for it. And yeah, see, as you can see here, the volume is definitely considerably better, like 962, 571, right, etc., etc. and the deltas that I like to go between are between 16 and 30. So I think for today, I'm gonna go somewhere in the middle, right? I'm probably gonna go around like 20, 25. Probably leaning more towards 20. And I would typically choose my deltas based off of how volatile I feel like the stock is, or like if I feel like it's gonna make an aggressive move. So essentially, the lower the delta, the further out the strikes are gonna be, and thus the higher percent chance that I have of actually profiting from this. So I'm gonna go for the 20 delta, right? So 20 delta here on the put side is 340. So I'm gonna sell the 340 put, and on the call side, I'm gonna sell the 405 call. So here, 880 credits, max profit 880. So I'm gonna take this either when it hits 21 days to expiration, right? Right now we're at 57 days to expiration, or when I hit a max profit of 880. And even as you can see here, right, P50, this means I have an 87% chance, mathematically, an 87% chance of hitting 50% of max profit. So I feel pretty good about this trade. I'm using about $4,404 in buying power. And yeah, right, so let me place the trade real quick, and then I'll give you guys a quick analysis. Okay, so we got filled right off the bat. Okay, so here the order chain, yeah, see, $8.80, and this is per share. Remember that options cover 100 shares, so this is actually $880 in total profit that I could potentially make. So now let's go into the analysis. View analysis here. Okay, yeah, so as of right now, it's not looking too good, but right. Essentially here with the short strangle, we're relying on Theta, you know, so we're gonna wait it out. So we're gonna wait for time to go by for Theta to decay, for us to collect our premium. All right, so here at expiration, right? So what were our strikes again? It was 340 and 405. So my goal, I wanted to stay between 340, which is right here, and 405 for the next, was it 50 for the next 57 days, right? I mean, like minus 21, whatever, right? 36, right? For the next 36 days. Yeah, and as you can see here, I have a 67.4% chance of profiting that. Yeah, so theta is 19, right? And remember, theta is decay. If all variables are exactly the same, on average, we'll be collecting about $19 every single day that we have this position open. Yeah, and our goal here is to keep the strikes between 340 and 405. If it's anything, if it breaks past that point, I will manage it. I'll record obviously, right? I'll manage it accordingly. But yeah, right. So I anticipate this getting better. Like this position is starting to get some action within the next, I don't know, like 2 or 3 weeks, right? So I'll see you then.
Okay, so I'm actually on vacation now, so I'm not on my usual setup. But as you can see here, it's been about 15 days. Let me check. It's been about 15 days since I opened this position, right? And I'm pretty much in my profit target. Um, so my goal was 50%, either 50% or 21 days to expiration. And today's also a Friday, right? So I know for a fact I'm going to be collecting data, right? And since I'm so close to my profit target, I'd rather just close the position now and then redeploy the capital on a fresh position, right? So I'm going to take it now. I'm going to close it. Yeah, if I close this and it gets filled, I get about $420 in profit. And I didn't do any management. I just placed the position 15 days ago and I just waited. If it ever broke any of the strikes that I placed, so if it ever hit 304, 340 or 405, then I would make adjustments. But in this particular trade, I didn't have to do anything. So I'm just going to close it. Okay. Looking at the order chain. Yeah, see, we got filled at 420. Yeah, this is actually an old position. This is a position I originally opened, but I the resolution was messed up, right? So just focus on this part, right? Yeah, opened it on June 25th and closed it on July 10th for $420 in profit. I didn't do anything too crazy. I just placed it and waited.
So yeah, we sold a short strangle on gold, 20 deltas, we did 0 management, and we collected $420 in 15 days. If you enjoyed this content, please like and subscribe. I'd really appreciate it. See you in the next one.